Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Thursday, December 28th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we talked about the fact that the uptrends remained intact, the SPX and the Dow were sitting near support, as was the RUT, and I basically tried to stress that I wasn't putting too much emphasis on the action, basically. We had the Christmas holiday coming up and the New Year's holiday looming, and basically said with year-end coming, a lot of traders are going to be moving to the sidelines, so the action was going to be light, and I wasn't going to put too much emphasis on a single day's worth of activity. That's still the case, but I still think it's important to stay abreast of what's happening. So let's go ahead and look at this week's charts. When we turn to this week's charts, we see that the picture hasn't changed all too dramatically. Look at the SPX. Basically, what I talked about in the blog yesterday was the fact that we've had this little bit of a dip at the end of last week, then we've had a little bit of a bounce, and that's pretty much just left the SPX where it was sitting a week ago. So not much change there. There was a lot made of yesterday's Dow new high. As I said in the blog yesterday, I'm not putting a whole lot of emphasis on that. I mean, the action is really light this week. The new high is worth noting, but I'm not gonna run out and make any decisions based on a tick to a new high on that. Now, one of the things I must confess to is that last week's chart of the Nasdaq was actually the Dow instead. So I messed up when I put the charts together. I've corrected that this week, and I want to kind of touch on what we've got going on here. We've got this steady line that you draw across there. Basically, that was the October, sort of a little bit of a high there, and we've broken above that and just been sort of testing it, bouncing along. The 50-day moving average is now caught up and is basically sitting right there. And I wanted to kind of point this out to sort of balance off the enthusiasm for the new high on the Dow. Basically, when you look at the comp, you're not seeing a runaway market at this moment, and when you look at the RUT, you're actually seeing that same thing there. It's holding above support. This is a technically strong picture. Don't get me wrong. I'm not saying there's concerns here. I'm just pointing out that for all the hoopla of the new high on the Dow, when you look at the broader measures of the market, this the action of the last week isn't all too impressive. As far as overall takeaways, the uptrends remain intact. We've seen a bit of a dip here on the comp. That's probably the weakest looking chart, but again, as I've said, I'm not going to put too much emphasis on that, given that the action's light and there's a lot of players moving to the sidelines right now. It'll be something to watch next week and the weeks coming, just to keep an eye on if we do start to see some relative underperformance from the comp. But for right now, when you look at all four charts as a whole, the uptrends remain intact. There's not too much concerning here. So it looks like we're going to potentially coast into the new year, with the indices prepared to maybe, sort of break out of the consolidation we see in the bottom two charts and see some new relative highs. But that's something to watch and to talk about in the coming weeks. I'm going to go ahead and wrap this up. I suspect this will be my last chart slideshow of the year, so I want to wish everybody a happy and safe and prosperous new year. And as always, stay tuned to the blog for further updates.